Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look once again on euro currency. Today we do not have a lot of new things. So as we expected, this market showing some minor retracement. Actually doesn't show any activity. Very small tactical pullback, which actually stands on all markets, not only on euro currency, but also on the dollar index, on 10-year yields, in general on other yields as well. And it's absolutely normal, natural reaction on the support area that we have on the euro currency. But it doesn't mean that the new background that market have got on the CPI numbers is just forgotten. So it's market just trying to think about it, inhabit with the new reality and what next step should happen. The most active reaction probably will start in the next week. So on this week, market will just get necessary data. So it will be also PPI numbers, some production index, as I said, retail sales, and this will create some background that let market to act more reasonably on the new background. So it means that today we'll mostly have some tactical issues for discussion on the intraday charts, because on the high time frames you can see not many things going on. The one thing that I would like to say is that now big analysis, big banks trying to discredit these recent statistics that we've got, trying to assure investors that this is temporal. January is very volatile. It's just because starting of the year, historically, this is most unpredictable data on inflation. This comes in January, and it doesn't mean that something is changing. Guys, I would like to just tell you that to take a look at the prices. Take a look at the gasoline prices right now in the United States. This was Indiana explode in the refinery in Indiana that's processing approximately 500,000 barrels per day. So you could just take a look at what's going on with the gasoline prices in the United States. Take a look at other commodities that we have, that the shipping costs have increased a few times. So I don't know who they would like to ensure that everything is okay and inflation is dropping, but I'm absolutely not believing all this stuff. So we suggest that this will be new spiral in inflation pressure in the nearest time. And we stand very close to its starting point. So actually what we have said when the first inflation spiral starting decreasing in the middle of the year, in the summer, we have warned that this is temporal effect, because all this stuff makes some lag so on market reaction, and we just need to keep in mind, don't just pay attention to these tricks that's coming from the analysis of the big banks who said that this is just temporal, that single number that, well, doesn't mean anything. It is not truth. So on the other markets, on the Dixie, we have also minor retracement. So normal reactions. Once again, this is resistance. We have the 618 level OP here as well. This might be even last for a bit longer maybe. But before the major reaction, some retracement started, I think that market could complete some targets on lower time frames. On the 10-year yield, we also see some pullback from the top of the 4.3%, minor retracement as well. But here, as you remember, we have actually double repo buy on a weekly chart, and that might be for higher action later within a few weeks. So market could reach the 4.5 or even higher. It's very probable. But for now, as you can see, also minor pullback. Speaking about futures on euro, take a look that on the daily performance with this drop, we also have got the grabber. And usually when the grabber has no lows to the left that has not been tested, because we have this one already, the target is becoming the lows of the grabber itself. So from that standpoint, So market will turn down, minimum target will be taken out of these lows. And let's take a look what we could consider and keep watching in the nearest few sessions. Market once again coming to the EMA city. So maybe another grab will be formed today, tomorrow. It's also the one thing that we need to control. On lower time frame, personally on the 4 time frame chart, I do not see something really interesting. We see minor bounce here from the lows. Still keep the same target that we already discussed, 105.75, but hardly it is actual important for the current week. Probably it will be interesting on the next week or even later. Currently we see this retracement, and I suppose that we could focus until the rest of the week on the target of the butterfly that we have on the hourly chart. So yesterday we said keep an eye on the pullback, and for this particular 2 levels to consider taking the position. Because based on the nature of the butterfly, if you have this type of action right to the 127 extension, it is very high probability that market will keep going lower to the 1618, which is 1 or 670. It's pretty nice distance, almost 67 pips until this target. For intraday chart is really great. And here you just need to catch the right moment, either right around 30% level or this confluence. This confluence probably also could be treated as some kind of an invalidation point, because if price will start moving above the 107.75, coming back to the top of the butterfly, this will be not good. It will be a bit irrational from the point of view of this just mutually exclusive performance. So because these drops suggest absolutely different action. But while markets stand here below this confluence, and especially if it will hold below this level, all the better. So you have few options how to trade this. Either drop your time frame to the 5-minute chart and trying to catch the precise reversal pattern. I don't know, maybe here you could find some hand and shoulders. You could use directly this pattern, or you could split the position and step in parts. So take minor part here. If market rate will continue action to the confluence, take the rest around this level. Finally, another chance to position taking, you could wait when the downward action will start, and after that try and take position on some minor retracement on the lower time frames. So that's the options that we have. In the current circumstances, I wouldn't consider taking new long position by far here, and probably use this rally that we have to sell into. So that's just in 2 words our view on euro currency.